Hey guys, today we are diving into an important topic in the realm of investment in companies, which are reserve matters. Now, reserve matters are crucial terms that dictate specific decisions requiring a special approval, often by a higher threshold of shareholders or by unanimous consent. These provisions are designed to protect the interests of investors and minority shareholders, ensuring that that major decisions that will impact on the company cannot be made unilaterally by the majority shareholders. That's called minority oppression of the minority shareholders by the bigger shareholders. Now, reserve matters are specific decisions or actions that the company's board of directors or shareholders cannot undertake without the prior consent from specified classes of shareholders. For example, an investor or a decision cannot be taken without the unanimous consent of all the shareholders. Common examples include changes to the constitution of the company. Another example would be the issuance of new shares. Why? Because when you issue new shares, when the company issue new shares, existing shareholders will be diluted. So therefore, you want this very important protection as a reserve matter. When the company wants to issue new shares, it has to get the consent of all the shareholders or a majority of shareholders or the consent of the investor who's investing in the company, before they can issue new shares, because the investor will be diluted. A third example, borrowing and lending. Significant borrowing or lending activities can affect the company's financial ability. For example, if the company borrows 50 million, 100 million, that will have an impact on the balance sheet. Or if the company lends another company or an individual 5 million, 10 million, that will have effect on the company's financial statements. Fourth example, changing the business scope of the company. If the company wants to go into new business, set up subsidiaries, venture into something, a business it has never gone to before, you want the minority shareholders or the investors want to be able to have the right to approve such a new business venture. Mergers and acquisitions. This would be another important matter that is usually found in reserve matters list, because if a company merges with another company, or a company go and buys over another company, or dispose of its assets, sells away its subsidiaries, this will have an impact on the company's balance sheet. So naturally, you want the shareholders, a certain majority, to approve, or for example, you might want the investor to approve. The last example I'm going to talk about is dividend policy. Okay. As you know, shareholders or investors get the return on investment usually by dividends. So you want them to have a say on the declaration of dividends. Because if the declaration of dividends is not going to be a reserve matter, then if the shareholder does not have a board seat, okay, the directors could just dissipate money by paying themselves huge bonuses, huge directors' fees, huge this, huge that, and then leaving very little of the profits left in the company to declare as dividends. And so the minority shareholders will suffer. So that's why it's also very important to include a dividend policy, a dividend clause in the investment agreement, stating, for example, that the company shall declare dividends no less than once every year. For example, 60%, 70%, 80% of net profits, blah, 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 blah. Now I'm going to talk about why reserve matters are so important. The reserve matters provide a balance of power and ensures that significant changes or high-stakes decisions are made with broader consensus. This is particularly vital in companies with multiple investors who may have different interests and levels of control. So I'm going to discuss some of the key benefits of including reserve matters in your shareholder or investment agreement. First benefit, protection of minority interests. If an investor invests in a company and gets only 20%, 30%, he will be a minority shareholder. He can always be outvoted by the founders, the majority shareholders. So it's important. One of the benefits is to protect the minority interest. This ensures that minority shareholders have a say in major decisions, preventing shareholders from outvoting them because they have the right, the right to veto or approve a transaction that has been specifically listed out in the reserve matters list. Second benefit of having a reserve matters list in the shareholders or the investment agreement is risk management. The reserve matters list helps manage risk by requiring careful consideration and board approval for significant actions to be taken by the company. Third benefit, transparency and trust. Having a reserve matters list fosters a transparent decision-making process which can build trust and confidence among the shareholders and the investors of the company. Fourth benefit, conflict mitigation. Having a nicely set out list of reserve matters reduces the potential of conflicts by setting clear guidelines on what requires special approval from certain groups of investors or shareholders. Now let's talk about implementation. How do you effectively incorporate reserve matters into your investment or shareholders agreement? First, identify key areas. Determine which decisions are critical enough to require special approval. Buying and sale of assets, change of name of the company, going to a new business, borrowing money from the bank. Number two, specify the approved thresholds for the reserve matters. Clearly define the approval thresholds for each reserve matter. For example, if there's going to be any appointment or termination of a company director, that would require the approval of 80% of the shareholders. Or for example, it requires the approval of the investor. Or for example, for any purchases of equipment or machinery that is more than $5 million, the approval of shareholder ABC, it will always be required. Or if a purchase of equipment above $5 million, a majority, 75% approval from shareholders will be required. Third, work with legal professionals to ensure that the reserve matters are clearly and unambiguously drafted into the agreement. Finally, ensure that all the shareholders are aware of and understand the reserve matters and the reasons behind them. To conclude this video, incorporating reserve matters into your investment or your shareholders agreement is a strategic move to safeguard the interests of all parties involved and to ensure the long-term stability and success of your company. Remember, legal knowledge is your best investment. Thanks for watching this video.